Gildan shareholders officially electing a new board. Glenn Chamandy is back as CEO, and it marks the end of a tumultuous period for the maker of T-shirts and sweatshirts and other apparel. It all began with Chamandy's firing about 6 months ago, and it represents a triumph for the activist investor Browning West. It's also the beginning of a new chapter for Gildan, and the expectations are sky high. Our own Amber Kanwar is live in Montreal, where the company's annual meeting has wrapped up, and she's got an exclusive broadcast interview with the reinstated president and CEO of Gildan Activewear, Glenn Chamandy. Amber, take it away.
Thank you so much, Andy Bell, and thank you, Glenn, for letting us crash here at Gildan in Montreal. There's so much to talk about the future. But can we just take stock of the last 6 months? What a wild ride. We rarely see this kind of drama spill out in public view. What has this been like for you?
Well, thank you. I would say that after about 40 years of building, I think, a good legacy in a dynasty like Gildan, it was very difficult. I would say I was quite saddened by the way the board handled the whole situation. And it was very tough on me personally. It was tough on my family. I think it was difficult for our employees in the company. And I think it was exhausting for shareholders, in which the board ultimately led an entrenchment and proxy fight, which cost shareholders over $65 million. For ultimately an outcome which is there was no need or cause for change, which was basically delivered by the proxy advisors, ISS and Glass Lewis, and ultimately the shareholders who voted. And I would say, but now we're turning the page, and I'm very excited about the future of Gildan. I'm excited about our new board, and the quality of the board we've been able to put together, and the ability for us to continue enhancing and delivering shareholder returns in the future.
Did you always know you were going to fight this? Because pretty immediately you came out with your press release, and then top shareholders came out backing you. How did that come about?
Well, I didn't, first of all, I didn't really know, to be honest with you. I was quite shocked at the time, blindsided by the whole situation. And then it didn't take long for, shareholders to, respond to the whole situation. And partly because I think the board did a poor job on the whole execution of the termination of myself, and didn't really go out and get shareholder engagement. So, you got to speak to shareholders. I mean, they're the ones that own the company, and they should have got advice from them.
There was a lot of mudslung, kind of both ways, but particularly about your efficacy as CEO by the company and the board at that time. Can you help clear the air and help us understand what was the source of the falling out? Had it been building over time? Was it over one particular issue?
No, look, like I said earlier, I was blindsided. I mean, the company's performance was stellar. If you look back from 2019 to 2023, the company had strong top-line growth. We had operating margins expand from 15 to 20%. We had EPS more than double from $1.66 to over $3. We've had great cash flow and good shareholder returns. So, for me, those are the metrics, and I think that ultimately was the reason why ISS and Glass Lewis said, "Look, how this was the company's performing." So I was completely blindsided by the whole situation.
Before we got to this point and the shareholders decisively voting in the new slate of the board, the previous one announced a strategic review that they had received inquiries to possibly sell the business first. Do you have any insight into who was interested in buying Gildan at that time?
Well, I would say to you that I think it was the board's nuclear plan, as they would put it, to and total entrenchment. I mean, they knew that they were not going to win the vote because of the overwhelming support by all of our long-standing shareholders, and this was the only play that they had, is to ultimately sell the company to save face and ultimately not get to the vote. I think they preempted hiring bankers before they actually got an offer, and they went out to the market, and they probably did get some offers, but I don't think they were serious, to be honest with you.
Was there a risk that Gildan was not going to be a Canadian company anymore?
Well, I think if there was ultimately a takeover in the company, most likely the company wouldn't be here in Canada anymore. Yes, for sure.
Now it comes to the future and the promises that have been made. $100 share price over the next 5 years. There was that lengthy presentation that was put out by Browning West with yourself as well. Can I say that that was
Correct.
a team effort? So am I right to assume that everything in that presentation, you and Browning West are fully aligned?
Yes, we are. And not only are we aligned, but the company put out their own presentation, which was really the presentation and the plan that I developed in October. So both of them are aligned, and I think that's an important point of reference. The company's got what we call our Gildan Sustainable Growth Strategy, which is our GSG, which is focusing on growth, innovation, and ESG. And what it calls for is mid-single-digit top-line growth, margin expansion, which our current operating margin is around 20. We think that we can up the operating margins slightly over time. And strong free cash flow, which will continue to be able to buy back shares and to maybe use our balance sheet a little bit more effectively than we've been using it in the past.
So I don't get it. If the plan that the board was going to do was your plan anyway, I come back to the question of like, why couldn't you execute on it? They talked about succession issues, that maybe that was a great plan, but it was time for somebody else to do the execution. Was that it?
Well, they said that I had no vision and no plan, and then when they announced their plan, they said they're not making any changes to the plan, which I developed. So I think there's a little bit of a contradiction there. And as far as the succession planning is concerned, listen, Gildan is a top-performing company with significantly high operating margins and great performance. That's not because of me. That's because of the people. And we have a robust succession planning process in the organization that really we believe that I believe we could have implemented over time, and I think the board was going in a different direction for whatever reason.
What do you think about Vince Tyra? Was he sort of a victim in all of this, brought in by a board when he didn't really have a mandate? How do you think about what his role was in all of this?
Well, I think, Vince is, somebody they engaged with. I think he wasn't.
Did you know him?
I knew him, yes, because he used to be a customer of ours at Broder Brothers. So I knew him about 20 years ago was the last time we saw each other. But I would say, they hired Vince. I think they didn't really focus, and this is probably, again, a disconnect on the board's understanding of really the company and the success factors that drive Gildan, and their lack of understanding. And Gildan is a vertically integrated, low-cost manufacturer. You need to have manufacturing experience. I mean, Vince was a nice person, athletic director, but he lacked the expertise, I think, to ultimately run the company. And I think he would have suffered, and I don't think he would have been able to really support the company in the long term.
Let's talk about that manufacturing, because it's one of the key pillars to lower costs. Moving from Honduras to Bangladesh, is that completely moving from Honduras to Bangladesh, and what kind of incremental savings do you expect to see from that?
No, Bangladesh was first put on our plate about 3 years ago, so it's been 3 years into the making. We did it because of we want to expand in specific product lines, as well as we want to expand in international markets. So we've got a big footprint in Central America already, and this is a way to diversify our footprint, expand into other geographical markets, and ultimately lower the cost on some of the items that we're going to be producing in Bangladesh relative to what they are in Central America.
This international push is new. Where was it a couple of years ago?
Well, it's always been part of our plan, but we've never had really the available capacity in our manufacturing system to be able to support international sales. So it was always sort of left behind, really, to be honest with you. And Bangladesh has a better trade arrangement with Europe and China, Japan. So we typically from Central America, it's not as conducive to ship to these markets as it is from Bangladesh.
When you look at the other key strategies, investors were certainly lured in by the prospect of greater buybacks. It's going to make up such a huge portion of your capital spending. When does that begin?
Well, it's going to begin pretty soon. I think we're in the process of evaluating our options in terms of expanding in our share buyback program. And as part of our objective to deliver value to shareholders, I mean, the sooner the better.
What is your stake in the company right now? As I understand, did you sell your position after you were let go?
Yes, I did sell a large portion of my stock.
And there was a promise to buy back. Have you done that? Do you plan to still do that?
I've reinvested myself in the company, and I will disclose that in ample time.
There was also discussion about levering up. Would you take on additional debt to do the buyback?
Well, right now the company's been operating at a very conservative balance sheet, probably too conservative. So we think, we were running at about 1.5 times leverage. We think we can take that up to 2 times leverage and still be very conservative in terms of our assumptions and our debt leverage. I mean, and the company has got a lot of free cash flow, and we feel very comfortable moving up a half a turn. And then with all the cash flow being generated, we should be able to buy back a significant amount of stock.
It sounds like there are parameters on debt. This is not like a private equity situation where you're coming in and loading the company with debt.
No, we're not loading the company with debt, but we want to get rated. Currently we don't have any bonds in our system. We're using mainly bank debt, and eventually we're going to go to the bond market. So having a good balanced structure in terms of your debt leverage, I think, is important. And we think 2 times is a manageable, because it gives us flexibility. It gives us flexibility if there's a big downturn like COVID. All of a sudden, when things go bad, and at the same time, it gives us a little bit optionality in terms if we want to do any type of other expenditures that are required.
You gave a press conference earlier this morning, and you said everything we're saying is sort of not outrageous, that this is all very manageable. But at the same time, it's very rare that executives come out and say, by this year, the stock price will be $60, and then 2 years from then, it will be $100. And I understand there's math that kind of got you to that point, but I imagine that that's a lot of pressure.
Well, it's not a lot of pressure because, we're excited. I mean, I founded Gildan with $380,000. The company has a $9 billion market cap today. So if you pre-split all the way back to the beginning, it's about 60 cents a share. So there's no pressure at all. I love the pressure. But I would say to you is that, we have a good trajectory. The plan is good, like I said before, with mid-single-digit growth, a little bit of margin expansion, share buyback. But the one thing we don't control is the company's multiple. Historically, we've been trading at 15 to 70 times earnings. And recently we've been trading more like 10 to 11 times. So getting shareholder confidence, I think, is going to be a criteria for us to really get the multiple back, which ultimately will lift the stock price, because the company's forecast next year is about $3.10. So, 15 to 17 times, we're talking about a stock that's $45 to $50 from where it is today.
What about succession? Are you and the new board going to address that at all? Because that seemed to be key to maybe the other board's issues, and the issue of distraction, projects in Barbados, for example. What can you tell shareholders about your focus right now?
Well, my focus, I'm 100% engaged. I can tell you that right now. And as far as succession is concerned, I think one of the things we've been able to achieve is by having an experienced board of directors with, I think, good succession planning experience. Michael Nealon, our chair, he's gone through 2 successions, including his own. It's a process. It doesn't happen overnight, and which the board it's the board's responsibility to fulfill a solid, fundamental succession plan. I believe that you change the culture of the company, you change the company, and growing within, and we've got a lot of great people. And I would like to see a good succession, and then even at a certain point, me even taking a position on the board, just to give the company continuity as we move forward. I mean, that would be a normal.
And you feel like you could let go? It is your baby.
No, no, it's not. I have a lot to offer. I mean, and I don't want to be stepping in the way of the great management team and the young team that we have. So when they're ready to step up to the plate, I'll be ready to move on. But I still think I can play a role, at a board level to support the company and shareholders.
Last question. This is something that I think all of corporate Canada watched in awe. It's a little bit different than other activist campaigns where you're seeking to replace the board and the CEO with somebody new. In this case, you're trying to reinstate it back to its foundational roots. What ultimately is the lesson, is the takeaway from a governance perspective?
Well, I'd like to call out, I think, in this situation, The board were the activists, and I think that is probably the nail in the head. But I would say, from my perspective, I spoke to the board. I told them the most important thing they need to do when they were going down and trying to make this decision was to seek out shareholders, get shareholder engagements. I mean, you need to speak to the shareholders, and ultimately they didn't do that. And we had 35% of our large institutionals rebel. And the board lost sight of what their responsibility is. Their responsibility is to represent the shareholders, and their responsibility is to create value for the shareholders long term. And in both those instances, they failed. So that is, I think, the lesson learned for boards. They need to understand that. And I thank our shareholders. I'd like to thank all of our shareholders for supporting me and having the confidence in supporting Gildan and the future.